Today's weekly update of on-chain metrics for the Bitcoin market is with Will Clemente. We have a great conversation as he breaks down so many of the different data points. Don't forget that these are brought to you by FTX US. You can click on the link in the description to learn more about what they're doing. Let's get into this episode with Will. I hope you all enjoy these and learn everything every Saturday morning. Will, what's going on, brother?
Yo.
How
How's it
are
going,
you?
man? I'm back at the parents' house for 2 weeks.
Woo!
And I got a pimple, so it's like old times.
Back at the parents' house and you got a pimple. What a opening line. All right, let's jump right in. We've got about 20 minutes or so. The Fed, they announced they raised rates by 75 basis points. Bitcoin goes up. What's your read?
Yeah, I think, just the general perception from like a high level is that, as the Fed continues to raise rates, and as this week we've gotten, a second negative GDP print, essentially the market is kind of approaching this as, well, you're getting to the point where the Fed is going to have to, kind of take their foot off the gas pedal in terms of at least the pace and aggression of how they've been raising. And they said that in their meeting as well, that they're going to kind of slow the interval between when they've been raising. The Fed doesn't meet again until September. So I think that kind of sets up somewhat of a window just from that perspective for a little bear market rally.
All right. Now we see Bitcoin's price is reclaiming the 180-week kind of trend line here. What is this showing us?
Sure. Yeah. So like the first two charts are just basic, like super high time frame trend charts. So we're looking at one weekly and one monthly. The one you brought up is the 180-week EHMA. So this is called the exponential whole moving average. It's just a moving average that has more weighing to recent price action. And so whenever it's green, as you can see, the entire chart is green. That indicates that it's in an uptrend. So this is a good kind of meme line to show you that over the long term, Bitcoin kind of only trends up because the moving average only trends up. And also, as you'll notice by looking at the chart, historically, it's kind of indicated kind of these macro bottoming or accumulation areas. And this is something that we've talked about for several months. And as we approach this, we said, hey, this is probably a pretty good time to start averaging in. And then kind of the sign of confirmation would be reclaiming that line. So for Bitcoin, one thing that I've noticed over the last 2 years, and also looking at, historical data as well, is that kind of these failed breakouts and breakdowns have been almost a better signal than actual breakouts and breakdowns in general. So like an example would be the double top of last year, right? We kind of deviated above the previous all-time high from May of last year, in November of last year. Another example would be the summer of last year when we deviated below 30K before initiating kind of that second leg up into the back half of the year. So on a similar note, if we did reclaim this, that would essentially make all the price action below that what's called a deviation. So you have kind of this all this activity that goes on below that trend. Once it breaks back below, it basically invalidates the breakdown initially. And so you can see the same thing with the 200 week as well. One thing to keep in mind, though, and very important to keep in mind, is that these candles haven't closed yet. So they'll close Sunday at 8 p.m. Eastern time. The reason I say it's important to close is if you look at the weekly, for example, you had kind of gotten this wick above the 200 week, but, we ended up closing below it at the last second. Price had dropped below before the weekly closed last week. So for now, it does look good, but, just for, kind of these more high time frame kind of trend-based market participants, maybe you want to wait to see that candle close on Sunday evening to get that confirmation that it has been reclaimed. But both of these look good so far.
The market cap of USDC and USDT, the stablecoin, dollar-based stablecoins, you've been talking about now for a couple of weeks, the relationship between those and price. What are you seeing here as we see this starting to kind of move a little bit?
Yeah, sure. I would throw, so that initial chart and the chart below it are both kind of in the same family. I would say the first one is a better indication. The second one's more of just something to look at confluence. So we'll focus on that first one. Like you said, this is looking at the market capitalization of USDT, which is Tether, and USDC, which is Circle Coin, and comparing that to the aggregated total crypto market cap. And so what you see is that you essentially have this kind of channel in the top section of the chart on the screen. Whenever you get to the bottom end of the channel, and the reason that I have it red is because that's historically marked kind of these topping areas. And from first principles, this chart actually makes a lot of sense. So it's indicating to you that there's been a lot of dry powder deployed in the market relative to the size of crypto's market cap. So therefore, there's a lack of new marginal buyers. And so that kind of from first principles indicates to you that we're probably likely in an area of topping out from very high time frame sense. This chart is looking at like, multi-month kind of swing trade type of timeframes. And then along the top end of that kind of ascending range or ascending channel, what you see is that whenever it hits the top end of that range, that indicates that there's a large amount of dry powder on the sidelines relative to the size of the aggregated crypto market cap. And so the way I kind of think of this is it's very like, like dry Kindle and when you have a spark, the more Kindle there is that's laid out, the more likely that you are to see that kind of fire spread. And so the more dry powder that there is on the sidelines, as you see any type of rally, that increases the likelihood that just from a psychological standpoint, you're going to see a higher likelihood of market participants wanting to chase. And so you are starting to see, I posted this about a month ago when it initially wicked up to the top of that range. But now since then, over the last, couple of weeks, what you've started to see is that start to kind of roll over off the top of that trend line. And so to me, what that's indicating is you are starting to see some of that on a relative basis, dry powder being deployed into the market.
When we look at MVRVZ Score, this is one that I think you and I started talking about, I don't know, year and a half ago or so. What is this showing us now? It's down in the green zone, my friend.
For sure. Yeah. We talked about this, as you said, for a long time. What we always said was, if this ever got back into this green range, it would be a tremendous time to average in. We got back into that green zone over the last month or two. And at that time period, we came on the show and we said, hey, look, this is a good time to average in. It does appear now that the indicator has successfully shown another time to average in as well. That doesn't mean that these lows can't get retested, but as we kind of head out of this accumulation range, it does appear that we're kind of moving away from that area where was an incredible kind of multi-year opportunity to buy. I think there is a pretty strong likelihood that we were to retest that, but just to say that the market has respected the green zone again, and if we get back into the green zone, I would definitely be averaging in as I have over the last month or two within it.
You got the 200-day trend here as Bitcoin continues. We got another green signal. What's this showing?
Yeah, we love the green stuff. Green's a cool color. Yeah, so like a month ago, I had posted this tweet below. It says, Bitcoin has only ever been this far below its 200-day moving average a handful of times, less than 2% of its existence, each of which look terrifying to buy at the moment, but terrifyingly obvious in hindsight. And so now when we kind of fast forward a month from there, as you can see, we've now exited that green range and we're no longer that far below this deviation from the trend that historically has marked bottoms. And so again, not to say that it's impossible for that to be retested. I think there's, a stronger than 50% likelihood that probably is retested by the end of the year. But that's not to say again that I think this this is served well again, and we used it in real time to indicate a good time to average in. And if we were to head back down below this, to this low of a deviation, to this far of a deviation from that 200-day trend, I would looking to be getting some more spot buys in as well.
When we go and we look at the derivatives, 3-month basis has recovered slightly, and there's even this backwardation. Explain this.
Yeah, so when we've been talking about derivatives, we kind of made this like mental checklist for things that we want to see. One of which has been seeing the 3-month futures basis go into backwardation. And so this has been something that's fueled bull markets. So if we look at, like 2020 to 2021, we saw this rip up to like 45%. What this meant is that you could long spot short futures and then capture the difference. And so that, this really rips high in times of like high speculation. Everyone wants to get long BTC, and it creates an ARB opportunity for market participants that are like delta neutral, meaning like they're, they have no directional bias essentially. Like that and arbitraging funding are like the two main ones that took place. Oh, and also obviously the grayscale one, but that was more towards the back half of 2020. But yeah, like those two or three were kind of the main drivers, I would say, of that kind of fueled the bull market. And as we can see right now, we're back from we reached as low as like 0.27% and even backwardation towards the bottom on a couple venues, but now we're back up to about 2.57%. So right now you can long spot short futures and capture the difference. Another thing I wanted to kind of highlight is that you're seeing kind of this lack of like extreme speculation in the market on this rally because this has remained relatively muted. As you can see, whenever we reach a period of high speculation, like early 2021, we can reach those high, states of 40, 45%. And you see the same thing in funding, same kind of general premise as well.
Yeah, we've got the short-term holder cost basis here. We're underneath it. What is this telling us?
Right. So short-term holder cost basis, explained it, I feel like, several times on the show, but just from a high level, it's the aggregated cost basis of market participants that have been in the Bitcoin market for less than 155 days. So we look at the market capitalization based off when those coins were last moved for that cohort of market participants. And currently that's down to 28,000 from like 53,000 at the peak in December of last year. This is something that we used when we broke below to say, hey, look, it's time to be cautious, right? Because we kind of lost what has been historically a kind of momentum or trend-based kind of indicator. And so what I'm looking at here is from like a super kind of macro perspective. This is a good indication of bear or bull trends. And so if we were to reclaim this, I think that's kind of confirmation of a trend change. So look, I think in this market, we have value-based market participants and momentum-based market participants. A lot of the indicators that we've talked about have been kind of deep value indicators. And so, those are for those value-based market participants like myself, like yourself, Palm, who have kind of this long-term, time horizon and they're able to hold their buys for several years. But there are also market participants that just look to follow Bitcoin's, extreme, in many cases, trends. And so this is a good kind of proxy for that. And as you can see in the beginning of 2019, kind of spring of 2019, once that was reclaimed, that kind of was a good signal for riding the rest of that move up to about 14K throughout the middle of 2019. And, you didn't really miss the Pico bottom. You missed it maybe by $500 or $1,000. But you basically are paying the price for getting that confirmation of the trend. So I would say for those momentum-based market participants, this is something to keep in mind. It currently sits again at 28,000, which is also, when we look at the chart below, some nice confluence with kind of daily, price structure. There's pretty much, I don't want to use this kind of meme word of price or, price gap or air between, but, we really had a lot of inefficient selling between like 28 down to 18K. A lot of that, in my opinion, was forced selling. A lot of that was probably 3AC, other participants that were kind of related to a lot of the contagion that took place. So you saw a lot of what's called uninformed flow. So basically people that have to sell, they're not necessarily, that could be liquidations or people that are, selling because they have to post collateral for, whether they're, borrowing from any of these like centralized lenders, and they were, all these centralized lenders are checking all these market participants after 3AC to see if they actually have the collateral. They do, because there's a lot of hysteria around who's solvent. A lot of that stuff took place. So you had a lot of kind of inefficient selling down. And so due to that, price structure really doesn't have any real resistance up until about that 28K level, which is confluence with on-chain as well. So, whenever you see confluence between on-chain and technicals, that kind of strengthens the importance of that level in my mind. So, I'd be looking for, I think kind of the base case would be, this would be a dead cat bounce to kind of that area, unless it were flipped. And then you could say, okay, perhaps this is actually a high time frame, trend change. So, those are two important levels that, I think are important to keep in mind from a kind of trend perspective.
Talk to us about funding rate. I know that you've said that you want to see more of a negative funding kind of rate regime. What's going on here?
Right. So funding is based on the delta between the perpetual futures and the kind of the weighted average spot price across the different spot venues, and something called the spot index price. And so what we want to see ideally is a regime of negative funding, and then B, price grinding up on a regime of increasingly negative funding. So if we look at, after March of 2020 was an extreme example where you basically had a disbelief rally off of those lows. Another good example is September of 2020. And another really good recent example was July of 2021. And Pomp, I remember when we came on and we said, the day before that big short squeeze, we said, hey, look, I think, we said there's a high likelihood of a short squeeze. The reason we said that was because funding was increasingly negative as price was grinding up. So, that in an ideal world is something that you'd say, hey, look, this is going to give me high conviction that we're going to see a continued reversal. Right now, obviously, we have seen some pockets of negative funding over the last month or so, but at the moment, we're seeing slightly muted positive funding. Again, it's nothing of major concern, but I'm just bringing this up as a point to say, if it were to go increasingly negative as we grind it up, that would be an indication to say, okay, I can have stronger conviction in this kind of being somewhat of a disbelief rally. So more of just put that in as something to look out for than necessarily something that's like giving a particular signal at the moment.
And the last thing is the leverage ratio. I know that you've been putting these out on Twitter, but explain these.
Sure. Yeah. I just kind of threw this in here just because I've seen this chart kind of circulating on Twitter as something that people are using. Similar to open interest, like the idea is similar. It gives you an idea of the amount of like pressure or contracts that are built up, and on top of that, this would tell you how much leverage is being taken on those contracts. The kind of calculation for this is you're looking at the aggregated amount of futures open interest, and then you're comparing that to the amount of coins that are on centralized exchanges. And, from first principles, that kind of makes sense, right? Because you're getting a proxy for how much collateral is essentially on these exchanges relative to how many contracts are open. So that should be a good kind of proxy for the amount of leverage that people are using. The problem that I personally have with this metric is when we go to the next chart, what's happened over the last year or so, year and a half, I would say, is you've kind of got this regime change in the futures market where you've gone from 70% of all the futures contracts being collateralized with Bitcoin and other crypto assets, mostly Bitcoin. And that's come all the way down to about 40% of the aggregated futures open interest being collateralized with crypto, again, mostly Bitcoin. So, I would say that kind of macro kind of regime change of kind of the futures market structure, that's changed, in my opinion, the usefulness of this metric. So I kind of just threw it in there just to say this is something that I've seen people talking about on Twitter, but it's something that I don't find particularly useful anymore because of kind of that underlying like fundamental change in the futures structure.
How do you feel right now in terms of sentiment wise? Like if you just kind of had to zoom out from all the charts, everything, you see Twitter, you see kind of the legacy financial institutions, you see the Federal Reserve and kind of all the macro stuff. Like what's your general sense as to where we are at the moment?
I think, I spend most of my time on like crypto Twitter, right? And with all these like anonymous, like, random animal characters as their profile pictures that are traders and stuff. And I would say like across all of these people, the kind of consensus is that it seems like somewhat of disbelief, I would say. And you can see that as well in like engagement from different, Twitter accounts, some that have, leaned majority bearish, rightfully so, perhaps over the last like month or two, and not necessarily saying anything against their views. Because again, those that have been, erring on the side of caution over the last like month or two or three, they've been prudent and have likely done well. But I would just say like looking at some of those accounts and their engagement, seeing, some of these posts get, 5 to 10,000 likes for just saying something like, hey, I'm not buying into this rally. That to me is a bit of an indication just from like a pure sentiment perspective that perhaps we're getting a bit of disbelief, especially when you compared that to some accounts that in the moment are leaning bullish. So I would say that has been one thing that I've noticed just like being on Twitter all day. But that doesn't mean too much because that's, I guess, just the crypto centric crowd and, the people that are really allocating capital maybe aren't on Twitter, but that's just something that I've noticed from like, kind of retail trading on Twitter perspective is that it seems like the engagement is definitely on the side of those who are kind of leading cautious. So
I love it. What where can we send people to follow you on Twitter?
sure, yeah, my Twitter account's W Clemente III.
W Clemente III. How many followers you got now? Are you over 700,000?
I don't know about that, man. It's definitely slowed down. That's another thing I'll say is that I'm sure you've noticed this as well, is that engagement I would say is kind of like dropped off a cliff just in general from like follower count, all that stuff, like the rate of change over the last like few months. I'll check it like once a month or so and just kind of use it more as like not just to say like in like a narcissistic way of like how many followers did I get this month, but like more so I think it is somewhat of a good data point to say, okay, hey, look, in September or November of 2021, I added like whatever 100,000 followers or something, and this last month I added like 9 or 10,000. So it's showing there's definitely a decrease in the rate of change of new market participants coming into the crypto space.
I think that's actually a very fair analysis. Like it's a great data point that shows just how much interest is there from outside of the community, right? The following is who's already in the community, and then how many people are coming from outside makes a lot of sense. Yeah. All right, my friend, we will continue to do these. I appreciate you jumping on, and we'll speak soon.
All right, thanks a lot, Pomp.
All right, later, buddy. I hope that you all enjoy these conversations with Will. I learn a ton, and they're very entertaining and informative. Don't forget that these episodes are brought to you by FTX. You can click on the link in the description to learn more. FTX not only has incredibly cheap fees, sometimes as much as 85% cheaper than their competitors, they also have digital stock trading, where you can trade stocks and crypto in the same location. That digital stock trading comes with no transaction fees and no payment for order flow, so you get best pricing. FTX continues to be one of the most innovative companies in finance and in the Bitcoin and crypto industry. Go check them out today by clicking on the link in the description and let me know what you think in the comments.